perhaps we can use this transition into talking about Charlie Munger, a person we referenced quite a few times here on this episode already, and of course throughout the story of of our podcast. So this question or this clip I'm going to play for you here is from the Danish Journal Q&A that he's doing together with Becky Quick, and it's sort of like going back and forth. So let's just play it, then perhaps we can talk about later what we took away from it. So here we go.
This one comes in from Matt, and he says, throughout your experience with Berkshire Hathaway, what are a few of the things that have surprised you most based upon some of your previous rational thoughts and ideas? Also, how have you used some of those surprises in your quest to become a better learning machine? These are all.
Well, I would say some of the things that surprised me the most was how much dies. The business world is very much like the physical world, where all the animals die in the course of improving all the species so they can live in niches and so forth. All the animals die, and eventually all the species die. That's the system. And when I was young, I didn't realize that that same system applied to what happens in capitalism to all the businesses. They're all on their way to dying is the answer, so that other things can replace them and live. And it causes some remarkable deaths. Imagine having Kodak die. It was one of the great trademarks of the world. There was nobody that didn't use film. They dominated film. They knew more about the chemistry of film than anybody else on earth. And of course, the whole damn business went to zero. And look at Xerox as once owned the world. It's just a pale shrink. It's just nothing compared to what it once was. So practically everything dies if you on a big enough time scale. When I was young enough, that was just as obvious then. I didn't see it for a while. You know, things that looked eternal and had been around for a long time, I thought wouldn't likely be that way when I was old. But a lot of them have disappeared. Practically everything dies in business. None of the eminence lasts forever. Think of all the great department stores. Think of how long they were the most important thing in their little community. They were way ahead of everybody in furnishing credit, convenience in all seasons, you know, convenience back and forth, use the same banks of elevators and so forth, multiple floors. It looked like they were eternal. And they're basically all dying or dead. And so that once I understood that better, I think it made me a better investor, I think.
I mean, the same can be said for managers. I've talked with Doug McMillon of Walmart, who carries around in his wallet, like on him, he carries around a list of the top retailers over the decades, and nobody's ever the same. You know, you could
yes, who are gone. Yes. Of course, retailers live in terror because you can die. Some guy gets a better way of doing it, and you just die, like those department stores did.
The ones that you invested in early on, you mean? Is it Baltimore?
Well, no, most of think of the department stores that are gone, just chain after chain after chain in big downtown. They're not weakened, they're gone, dead. And to have IBM have the huge position it once had in terms of utter dominance, and now it's just one of the also-rans. And it's still an admirable place. I'm sure they have a lot of talent left in IBM. It doesn't help you. You die even though you're talented and hardworking.
So I really like Charlie Munger's response here. You know, I mean, perhaps I could actually hop to another clip that he's also doing. We're gonna make sure to link to this. I want to say it's like 2 hours and 30 minutes or something like that. You can find it on YouTube for free and just watch it. But if I can just jump to actually another thing, and then perhaps go back to what he talked about here in the clip. Becky asked Munger how many asset managers that was worth their fees, and he said 5% or less. And then so it sort of like goes back to what we talked about here in the clip, where capitalism is just so brutal. And, great businesses come and go. He talked about Xerox and Intel and other companies. Well, Xerox is gone now, Intel's still here, but in a very different shape than they used to be. And it's hard not to think about, for an active investor like me, whether I should invest passively. Whenever you hear that, even Munger talks about how difficult things are now. And I'm sure many of the listeners have thought the same. The tenure in the S&P 500 is just getting shorter and shorter. Everything moves faster and faster. And you have more and more evidence about why passive investing is such a persuasive strategy. Also because you're fighting against your own instincts. So even if you were, quote unquote, as good as the market, you might still do some silly stuff because you cannot control your own emotions. And it's one of those things where you can have an intellectual discussion and say, I don't become emotional. And then something like COVID happens and the stock market is down 12% in a day. And you're like, this doesn't feel that well. And it's not the same whenever it's play money on fictitious portfolio. It's different if it's like, my kid's in this school and I need to, save up for college and I have hospital bills. Like it's just very different. So anyways, all of that being said, I'm still investing passively. I have a few index funds too, but I am investing actively despite what Munger is talking about here. And I wanted to talk about that decision before I throw it over to William here a bit, because it's something I reflected on quite a few times here over the past quarter. I was looking at my brokerage account here the other day, and it turned out that I was marginally outperforming the market over the past 5 years. And so whenever I first saw it, it got me excited. I patted myself on the back for a few seconds, like, oh my God, you're that amazing. But then I thought to myself, Stig, you're the most ridiculous person in the world. Think about this marginal outperformance. You could have bought a passive index and saved thousands of hours not reading investing books and 10Qs and 10Ks. Like you do not appreciate your own time. Like that's ridiculous. And you could be down tomorrow. Why are you celebrating that? And so I thought a lot about that, and I had this discussion with some of my friends here the other day. So I have one friend who is financially independent after selling his company, and he now has this quote unquote problem, what to do with his time now, because he's mid 30s, retired. Like what do you do? Like you have all of this time all of a sudden. So he's very creative and sees investing as a way to preserve his purchasing power. Like he read a ton of investing books, so he definitely had the interest, but he would really like to spend as little time as possible actually investing and just live off that income if he can. He wanted to spend his time on something else, which I completely respect. And then, perhaps that approach resonates with quite a few of our listeners. And then you have the other approach, which might resonate with very few of our listeners. And I kind of felt that was interesting too. So I have another friend who is also an entrepreneur, quite well off, making close to 7 figures a year. And he's been asking me, like, what should I invest in? And I said that he should probably invest in a index fund, like track the world market. Done. Boom. And he said that he kind of felt uncomfortable doing that because he likes the hustle. Like he likes to work and just like, oh, I'm going to get my expected 5% or whatever, however you want to make that multiple. But like, it doesn't sit well with him because he was used to doing the hustle. And he said to me, and I don't know if this sounds ridiculous, but if he could still get 5%, but just work hard for it, he would almost prefer it to not having to work for it and still get the same return. And so whenever he said that, I was laughing, but I was like, wait, Stig, you were doing the same thing. Like, you were getting a market return, but you're putting a bunch of time into it. And why are you doing it? It sounds so ridiculous. So I want to paint a bit more color around it, because in case there are some people out there who feel the same kind of conflicting emotions. So I love watching football. I absolutely love watching football. I do not get paid to watch football. I'm sitting in my couch watching my favorite team. I have a lot of fun.
This is soccer.
Yes, sorry. Yes, for the American listeners. Yes, you call it soccer. Yes.
Yeah.
We call it football here. Yeah,
real football.
Real football. Yes. So, and I was like thinking, I'm sort of like trying to defend my own silliness by using the same analogy to for investing, because I love the process so much. I love reading 10Ks and 10Qs. Like it's as much fun for me as watching football or something else. Or hanging out with my friends. I just really like that. And so I know it's gonna sound ridiculous, but like if you told me like, yeah, you're not going to beat the market, and you would probably long term be absolutely right about it, I would probably still do it, because why would I not do something, again, optimizing for happiness? Why would I not do something that really, really makes me happy? Even though
it's a hobby that you're paying for in some sense. So if you turn out to be really good and you make money, then it'll pay off. But if not, it's it's a bad analogy in some way to say it's like going to a casino but losing only a very small amount. Say you went to a casino and you said, okay, I'm going to gamble, but I'm not going to gamble more than $100. I'm going to get to eat in these really good restaurants at the Wynn Casino or whatever it is. I went to stay at the Wynn Casino once because I was working on a book project and staying in a beautiful room there. And so I didn't gamble at all, but I got to enjoy the food and I went to a great show and stuff like that. So I don't know, you could say it's a little bit like that. You're prepared to lose a little bit of money to support a hobby that you really enjoy, but there's upside here if you're right. If the danger is that we delude ourselves, right? So it's like people thinking they're good drivers.
Yes.
And so you have to, it all starts, I think, with self-honesty and self-awareness, to look at yourself and say, do I actually have any kind of competitive advantage? And when I said to Ed Thorpe, how can I tell if I have any competitive advantage? He said, well, if you're having to ask that and you don't really have a good answer, then you probably don't. And it's very deeply unsettling. And I have some competitive advantage potentially in that I know a lot of great investors. And so you could so look, like I talked to Bill Miller for a couple of hours the other day. I know how Bill Miller's invested. It would be easy for me to say, well, Bill really likes this stock, and this cryptocurrency, and I should do that. But that's really hard for me as well, because my situation is different than Bill's, and my temperament is different than Bill's. So I'm not playing the same game. It would be hard for me to load up on Bitcoin. Whereas for him, he's perfectly happy with situations where there's an asymmetry where he could lose everything, but if he's right, he'll make enormous returns. For me, I'm less comfortable with that because of my personality. So I think a lot of this stuff really stems from self-awareness.
And as I was, kind of in a parallel or simultaneously getting more and more involved in my own investing, it was only natural that I became curious about, well, what does Charlie Munger do, and how did he influence someone who, even a casual observer would say is, the greatest investor of all time, Warren Buffett? What role did he play? And then I found myself, I remember vividly, it was 2015. I was in Los Angeles for seeing some family, but also for some business. And I think I had the 2015 Berkshire Hathaway annual meeting transcript of the Q&A. And maybe it was for the previous year. The year doesn't matter as much as what I took from it. And I'm reading through this, and it's, again, just Charlie and Warren going back and forth. And I was struck by how humble they were. They were, in my mind, I'm thinking these guys are both, I say these guys, I don't want to sound like on that friendly level with them, but just that's what my brain was telling me, like these guys. these guys are billionaires and they're talking about themselves like they're a bunch of dogs, like we were so stupid to do this. And wow, we really blew it on this deal. And that was such a stark contrast to so much of the quote unquote, like billionaire wisdom that was online at the time. And I know from at the time, I was also studying a lot of psychology and getting more into that world as well. And realizing what they were doing took it to a different level because it's so hard for us to acknowledge our own mistakes. So the fact that they were doing that showed me the kind of like real intellectual superiority that they were demonstrating by being so humble. Because at that point, to be so successful and still really talk down on your past mistakes, not only is that hard to do, but it's also really effective in terms of making yourself better. So I was just very impressed by the overall, just everything they were doing.
I immediately started by saying to him, I regard you as the grandmaster of stupidity reduction. And how come? Why is that your approach? And I started to talk to him about this idea that I had decided was really the most central lesson I wanted to share about Charlie, which is that you want to focus not so much on being smarter, but on reducing standard stupidities, reducing common error, unoriginal mistakes, as he would put it, or asininities and inanities, because he always had this wonderful way with language. And so I talked to him about why that was a sensible approach. And he said, look, it's just easier to identify what not to do than to identify what to do. And he said, it's a different way of solving the problem. You're solving the problem backwards. And that's easier sometimes than solving the problem forwards. And he said, obviously, you want to solve the problem forwards as well, but you want to invert by asking yourself what not to do. And so Charlie would take these examples of standard stupidities, these things that had gone terribly wrong, and he would ask himself, well, what stupid behavior caused that? And then he would say, well, let me not do that. And I remember then at one point during the annual general meeting, I was sitting next to one of his children, Molly, it was, his daughter, Molly Munger, who is a lawyer and philanthropist. And I was asking her about him because as a journalist, you'll take any opportunity to get an interview that comes your way like that. And she started talking to me about how when she was a kid, he always had these morality tales that he would tell his children about terrible things that had happened in families. And she said usually they would involve some incredibly ungrateful child of some vastly rich person who had failed to appreciate the wisdom and generosity of their parent and ended up in a lawsuit with them or a dispute with them. But it was a really nice example of this habit of studying standard stupidities, studying the way things go wrong, and then learning not to do that. So I wanted to start by asking you about Charlie Munger. You're obviously in a very unusual and privileged position of having Charlie as a close friend and mentor. I think you've been friends with Charlie since Warren Buffett introduced you to him back in about 2008. And so I wondered if you could talk about just what it's been like to hang out with him over the last 14 years, whether there are any particularly memorable experiences you've had with him, and then maybe we can get to what you learned from being in Charlie's orbit over all these years.
Yeah, well, I have to pinch myself with all of this because, I think on many fronts, I think all of us are very privileged to be living in the time of Warren and Charlie. It'd be kind of like living in the time of Newton, or Einstein, or, any of those, luminaries we look up to. And so that's wonderful. And I think in my case, I would have never expected to have any kind of a interaction directly with Warren or Charlie. I think that's, that was just not part of the equation. And then, of course, Warren takes bribes, and if you bribe him enough, then he'll sit down and have a meal with you. And this year, actually, I think was the last year that he's auctioned off the charity lunch. So I'm not sure what it went for, but that's the last one. And so since he was willing to take the bribe, and I had bid for a few years, but in 2007, Guy Spear and I prevailed, and we won the lunch, and we met Warren in 2008, and I pretty much just expected that to be it. I wanted to just thank him in person, and I did not expect to end up with any type of a ongoing relationship. And what Warren did during the lunch is he kind of got competitive when my wife told him, my ex-wife told him that she was, her true love in life really was Charlie. And Warren immediately told her that Charlie's a very boring guy. And I'm really the one out of the two who's way more interesting. And then he told us that he would arrange lunch with Charlie just so we could see how boring Charlie is and we could compare, who was the better lunch companion. And I thought he was joking, but then the following week, his assistant sent a note to Charlie's assistant, and that led to actually in 2009, lunch with Charlie at the California Club. And that actually, the funny thing was, I thought that Charlie Munger lunch was way better than the Buffett lunch. And it was kind of like buy one, get one free, which was great. And of course, you get tongue tied and, all of this. And I remember Charlie came to that lunch and then he reaches into his coat pocket and he pulls out this printout, which has like Guru Focus, written on it. And it has my US portfolio, the 13 Fs get filed. And he's looking at the portfolio. And, this is 2009. Everything has crashed and burned. Okay. And, my net worth is decimated by like 2/3 or something. And he looks at Sears Holdings, which was in my portfolio, and he just shakes his head, like that, like quite extreme disapproval. And then I remember we probably had some brief discussion on Sears, and the markets were already closed that day when we met. But the next day, I wiped Sears Holdings out of my portfolio, which was a great, I would say, instant take-home value from the lunch. And but anyway, I think the thing about and then of course, what I also did not expect is that lunch would lead to additional interactions and a friendship with Charlie. I never expected that. And then I think a few years after that, I became a substitute bridge partner of his. So every Friday afternoon, Charlie would play bridge at the LA Country Club with his friends. And they started inviting me when one of the old guys couldn't make it or couldn't get out of bed or something. And so usually I'd get to know on Thursday night or Friday morning that we have a slot. And I'd say, yeah, you don't need to give me notice. I just drive over. And so those afternoons were really amazing because we would start with lunch at the LA Country Club. And I'd be sitting there at this table for 4, and just sitting across from me would be Charlie Munger and Rick Goran. And, I'm looking at these two guys, historic figures and all of this. And, I would ask them all these questions about the deals in the 60s and the early days when they were working at the Pacific Stock Exchange. And they were, any type of lunch or bridge or dinner with Charlie is always very entertaining. It's very educational, but it's very entertaining.
How do you get started with stock investing? I've put together a course to teach you everything I wish I knew when I first started investing in stocks. Let's start at the beginning and ask, what is a stock? Let's zoom on into what it's actually like to buy a stock. A few options are Charles Schwab, TD Ameritrade, Ally, E-Trade. Fortunately, you won't have to necessarily calculate all of these taxes yourself. I'll outline a few main ones to be aware of throughout your lifetime investing journey. As Warren Buffett says, your best investment is yourself. There's nothing that compares to it. By the end, you'll be savvier about stock investing and personal finance than the vast majority of people. Even if you're not a total beginner, I'm confident you'll get a lot out of the principles and strategies I outline, which we'll build on throughout. A link to the course is available in the description below. See you there.
Is there something that's changed in the way you operate in the world from actually being up close with Charlie all these years? Like, has he changed the way that you think and behave?
I would say that the greatest learnings I've had from Charlie have not come from. Well, he said some pretty amazing things to me, so it'd be up there. But I would say that besides some of those things he said to me, which have been transformational for me, most of my learning from him on the one-on-one interactions have come from observing him. Not what he's saying, but observing how he functions and observing how his kind of day is structured and how he arranges his life and, the interaction with his grandkids or interaction with his kids or his daughter-in-law or his manservant and all of that. So I think that when I just observed, Charlie with his friends and family and just with himself when he's reading or something, those have taught me a lot more.
Is there stuff that you've consciously cloned from the things you've observed in the way he behaved? Because I remember years ago realizing that when you replied to emails, often you would write a couple of words in pen at the top on a printout and have it faxed. And I was like, that's what Charlie does.
And actually, I probably took that from him because I had received notes like that from Charlie much before 2009. I'd send something to him or something to Warren. Warren would sometimes send it to him, and then I'd get a note back and that sort of thing. And Warren's notes back many times would be a letter and whatnot, but Charlie was always a scribble and whatever. And but I think that the biggest thing I took away, and it's just so daunting, and I still am daunted by it, is he's set up in his parlor in this kind of lazy boy type easy chair, and on both sides of him are high tables, relatively large tables, and there's a lot of high powered lights behind him because his eyesight is not that great. But the best analogy I have is that there's a big stack of books on one side and other reading materials and barons and value line whatnot, and there's a big stack of books on the other side. And Charlie is like an assembly line, devouring. I mean, there's an engine of these things running through from the unread pile to the read pile. And I would estimate that he's reading more than 500 books a year. I think it's more than one a day. Now, he doesn't read the way we read. He's skimming a lot. And he's especially skimming a lot when, he's not, he finds the author rambling or whatever, and so he's trying to get the nuggets he wants. And they are in such a wide range. And, usually sometimes I'd go in on a Saturday evening or something to have dinner with him. And he'd be reading something about, global warming, some book on global warming or climate change or something. And then there'd be a discussion on that. And sometime he would be reading about the chief of staff for President Roosevelt. And then we'd have a discussion on that. And I forget the name of the guy, he was a Navy admiral. And this guy basically was, Roosevelt really trusted him. And Roosevelt trusted very few people. I mean, he was very, very, he had a lot of his cards close to his chest. But with Leahy, Admiral Leahy, he had complete trust in Admiral Leahy. And Admiral Leahy was kind of like, this guy who was like a frat boy. He liked to have his drinks and whatever. But Roosevelt knew that he didn't have another agenda and that he was loyal and that he could get candid opinions and such from him. So Leahy, which most people don't realize, wielded enormous power, just massive amounts of power in the Roosevelt administration. And so there was a book on Leahy, and then, I read that book later. So these subjects would be all over the place.
So Tren, the thing I like about Charlie, and you're bringing it up right here, is it's almost like he says the stuff that Warren Buffett would never say. It's almost like it's Warren Buffett's alternate ego coming out at times where you know, him and Buffett have almost the exact same opinion about everything. They've pretty much meshed at this point. But Charlie's the one that actually comes out and says it. Would you agree with that?
Yeah. He's completely unrestrained about the truth. Yeah. You know, what he said earlier this year about Valiant, very few people are willing to go out and say what he said. It's simplified, I think, by the rise of comedians in political discourse today. Comedians are out there telling the truth, and people are hungry for the truth. And in an investing environment, Munger's out there saying things out loud that most people would only think about in their heads, like, oh, I can't possibly say that. And it's so refreshing. And I think people are hungry for that, not only in business, but in politics. Authentic people are interesting and funny.
Yeah, I definitely think that Charlie doesn't have the same urge to be liked as Warren Buffett. So I definitely agree with your Preston. Sometimes you might be looking at Warren Buffett when he's replying to a question thinking, yeah, he probably thinks that this is really some bad stuff happening. Where Charlie, he's like, I'm just telling the truth. I don't care what you think about me. And I think that's really what people like about Charlie.
One of the things that Charlie has said, they say, well, Charlie should serve as a role model for people. And Charlie says, no. He says, I'm too cantankerous and I'm too basically in your face. And he says, I don't think I'm a good career model for anybody. He also said that he doesn't particularly admire the fact that he's made so much money as an investor because he's not the person out there creating things. And so he'd rather people actually go out there and be doers, but learn from him.
So speaking about business titan, it's really hard to talk about Warren Buffett without mentioning Charlie Munger. And I'd say based on my own experience, partly reading about him beforehand, but also experiencing Charlie Munger at the Berkshire Hathaway meeting, he is just such a brilliant person. So I'm curious about your thoughts on this. Do you think that Charlie Munger has a huge impact on where Warren Buffett is today? Or do you think Warren Buffett would probably be where he is today in his own right, regardless of the influence of Charlie Munger?
I would say more the latter, and that's not to depreciate Charlie at all. Charlie he's also a genius, a curmudgeonly genius, whereas Warren is, a sunnier, optimistic, at times almost so optimistic about America and so on. He's almost a cheerleadering. Charlie, I'll never forget the time I first met Charlie. I was researching the Buffett biography. I was very excited. I was writing people close to him. Most people did cooperate, but some didn't. And naturally, when I'd send a letter, I'd wait with bated breath. And Charlie said, come out. I'll see you at the California Club, which is where he hangs out in Los Angeles. So I flew out there and we sat down and I had a primitive personal computer laptop with me. And I started to ask questions. So Charlie just starts to talk. I probably asked 2 questions, in 4 hours. He just kept talking. Just kept typing. And you'd think that there'd be no limit if you're trying to get all the dirt, not in an unclean way, but just good stuff you can get on your subject. And here you've got the guy with a business sense, knows him best. You'd sit there for 3 days, but the human mind doesn't work that way. After some spell of time, you just can't really take in anymore. You just got to walk around the block or something. So I remember it was about 4 hours had gone by, and I said to Charlie, "This has been great. I think it's about enough for the first day." And he just stood up, turned 90 degrees toward the door, and walked out. Not a word. Not I enjoyed it. Not I didn't enjoy it. Not
nothing.
I mean, it was more later, and I said to somebody, did I say the wrong thing? No, that's just Charlie. He doesn't waste time on documentation. In terms of your question, how responsible is he? I think Charlie has been, a terrific sounding board for Warren. Because he's so smart. He's so, unconventional or at least unafraid of convention. There's no censor there. There was one time the two of them were walking down the hallway and they had this manager the company he was running wasn't going well. And the guy was always asking them questions. Should I do this? Should I do that? He was just a big bother for them. And they see the seller coming toward him and Charlie just blurts out, "Here comes trouble." And his singular ability, Warren used to call him the abominable no-man. Charlie doesn't get stars in his eyes about companies, CEOs they might be investing with, or he doesn't fall for, he's heard it all. He gave me million and said, use this to try to con Charlie Munger, I'd give you money back. Just couldn't do it. And by the way, he doesn't get conned by Warren either. A lot of people find it hard to tell Warren, you're really all wet on this one, not Charlie. And that's invaluable. We see with a lot of politicians that they surround themselves by yes men.
Yeah.
And, Warren surrounded himself by one guy, the guy, he's the person he calls a no man. So I think that's been tremendously useful. It saves him from mistakes. I think it's made the work more fun for Warren to have this partner, alter ego. And they see so many things alike, and to have this professional and personal partnership for whatever those decades now. I don't think, many of the ideas came from Charlie.
Charlie regards it as extremely important to read every day in order to become wiser and improve as an individual. When addressing USC law students in 2007, he stated that, quote, "The acquisition of wisdom is a moral duty. It's not something you do just to advance in life." And there's a corollary to that idea that is very important. It requires that you're hooked on lifetime learning. Without lifetime learning, you people are not going to do very well. You are not going to get very far in life based on what you already know. You're going to advance in life by what you learn after you leave here. Consider Berkshire Hathaway, one of the best regarded corporations in the world. It may have the best long-term big assets involving investment record in the history of civilization. The skill that got Berkshire through one decade would not have sufficed to get through the next decade with comparable levels of achievement. Warren Buffett had to be a continuous learning machine. The same requirement exists in lower walks of life. I constantly see people rise in life who are not the smartest, sometimes not even the most diligent, but they are learning machines. They go to bed every night a little wiser than they were that morning. And boy, does that habit help, particularly when you have a long run ahead of you, end quote. That alone just goes to show how seriously Charlie takes reading and learning in his daily life. Gautam uses one example of Charlie Munger. Charlie Munger has always been a big proponent of delayed gratification. He has emphasized the importance of patience and being prepared to act at scale when great opportunities arise. These are rare and fleeting, so we need to be patient, prepared, and decisive to seize them. Munger has shared an inspiring example. He has been reading the Barron's magazine for more than 50 years and found only one actionable idea in it. It was a cheaply valued auto parts company which he bought at $1 per share and sold a few years later at $15 per share. This earned him $80 million in profits. Munger then gave Li Lu the $80 million, and Li Lu turned this into $400 million. Through just 2 investments, Munger turned a few million into $400 million. This example illustrates the significance of extreme patience, deferred gratification, and displaying strong decisiveness at the right moment. It is why Munger has said, "It takes character to sit there with all that cash and do nothing. I didn't get to where I am today by going after mediocre opportunities." I wanted to start out by touching on the subject of simplicity. Munger stated, "Take a simple idea and take it seriously." Oftentimes investors are attracted to what is seemingly complex, or maybe even what's sexy. The get-rich-quick option strategy, the obscure cryptocurrency that nobody's ever heard of, or the hot new AI company that's trending in the news. Investments that are extraordinarily complex are typically really hard to make any money from in any reliable or dependable way. Munger has stated, if something is too hard, we move on to something else. What could be simpler than that? That's not to say that all investing is easy, especially if you're investing in individual stocks or constructing a portfolio of your own. To simplify, we can break down a complex subject into pieces that are much more easier to digest and wrap our arms around. It can be helpful to ask questions such as, what is truly most important to me in life? What will lead to more fulfillment? How can I be a better friend or partner? What is it that drives investment returns? What are the 2 or 3 most important things that matters most in the business I'm analyzing? These questions get to the essence of a problem in understanding the simple and elegant way that we can approach it. Peter Bevelin writes in his book, Seeking Wisdom, that by focusing on finding decisions and bets that are easy, avoiding what is hard, and stripping away anything that is extraneous, Munger believes that an investor can make better decisions. by tuning out folly and swatting away unimportant things so your mind isn't cluttered with them. You're better able to pick up a few sensible things to do, said Munger. Focus enables both simplicity and clarity of thought, which in Munger's view leads to a more positive investing result, end quote. With so much noise in the world, it's really empowering to be able to recognize the few key things that really matter and really move the needle, whether that be in your relationships, your work, your investments, or really anything else. What is it that really moves the needle and really matters is such a powerful question to help us simplify this complex world. Munger has stated, quote, "Part of having uncommon sense, I think, is being able to tune out folly as distinguished from recognizing wisdom. You've got whole categories of things you just bat away so your brain isn't cluttered with them. That way, you're better able to pick up a few sensible things to do," end quote. I also need to mention one of the key lessons that Munger that has had a really big impact on me in terms of life, and this is understanding the importance of incentives. Munger regards incentives as one of the most powerful forces that drive human behavior. The basic idea of understanding incentives is that you get what you reward for and avoid that for which you are punished. Munger has stated that if you get a dumb incentive system, then you get dumb outcomes. Gautam Baid's chapter on incentives and the joys of compounding is by far one of my favorites, as he really nails home this point so well. There's a few quotes from the book that I wanted to read here as it relates to incentives. Benjamin Franklin stated, "If you want to persuade, appeal to interest, not to reason." And Jesse Livermore said, "My main life lesson from investing is that self-interest is the most powerful force on earth and can get people to embrace and defend almost anything," end quote. It's a great point here from Livermore. Incentives can really cause people to do some really bizarre things. Decent people can do terrible things if they are given the incentives to do so, and otherwise terrible people can make decent decisions if they're given the incentive to do so. Gautam writes, "The real power of incentives is the ability to manipulate the cognitive process." Buffett shared the example of Geico and how he cared about the employees growing the business through policies in force and growing through, areas of the business that were profitable. So they put together a bonus structure that incentivized that behavior amongst their employees. So that way the interests of the owners are aligned with the interests of the employees. Nassim Taleb also has a quote here, "Never ask anyone for their opinion, forecast, or recommendation. Just ask them what they have or don't have in their portfolio." And I'm as aware as anyone that we talk about different stocks on the show, and I talk about stocks in our TIP mastermind community, and I'm biased towards these companies, at least to some degree, if I own them and I'm public about them. And it makes it even more difficult to change my mind if the facts change after I talk about them on the show. This is my way of saying that you shouldn't ever own something just because someone else owns it, because if the facts change, that person might sell that company without you even knowing. I'm fully aware that any of the companies I own, I might change my mind next quarter, next year. And if the fundamentals change materially enough, then hopefully I'm humble enough to admit it and recognize it and take action. Gautam also writes here, "It's imperative that we think deeply about the incentive systems we create, because ignoring the second or third order effects of an incentive system often leads to unintended consequences, also known as the Peltzman effect." Anderson writes, "An example is monetary rewards offered to help exterminate unwanted animals such as rats and snakes. What authorities failed to foresee was that people would start to breed the rats and snakes. Human beings have a tendency to game systems for their benefit," end quote.
Most of my learning from him on the one-on-one interactions have come from observing him. Not what he's saying, but observing how he functions. And observing how his kind of day is structured and how he arranges his life and, the interaction with his grandkids or interaction with his kids or his daughter-in-law or his manservant and all of that. So I think that when I just observed, Charlie with his friends and family and just with himself when he's reading or something, those have taught me a lot more.